Welcome to Market Movers. I'm Jim Urio with Scott Martin.
Hi, Jim.
Okay, so we are on bank earnings week.
Yes.
Now, last time we had that in October, the banks mixed. I know Goldman reported poorly, but still rallied. But after the banks reported, like directly after, that's when we saw the beginning of that 8.5% rally in the stocks. And I'm not giving credit to the banks totally, but this time, do you have an opinion on what's going to happen this
I
time?
could have sworn you were giving credit to the banks because so many people have tried to do that, Jim. And this is one more time, maybe similar to October, as you point out, where the banks don't stink it up. And therefore, it gives the market a little bit of relief. And other assets come into play, like you mentioned with technology. Financials obviously started that, but technology really was the big home run there.
Right, and I guess what I was implying is that once banks are done, they take the fear out of earnings week a little bit. Now, banks week versus tech week, clearly they're the two most important parts, but is banks just way in the shadow?
It still is in the shadows because they're still not showing that, say, escape velocity that we've seen in tech so far, Jim, and it's not necessarily the bank's fault. I mean, as much as I don't own very much banking stocks right now, it's been the interest rate curve that's been hurting them the big time.
Understood. Now, before we dive into the trade discussion, I'd like to point out that these are examples, not trade recommendations or advice. When we're pricing these out, the S&P was trading about, let's call it 32.82, Scott.
Yeah, 32.82, Jim, on
Wow.
the good old ES. I mean,
Yeah.
we're approaching some nosebleed levels here, Jim, and this really actually makes, I think, putting on trade expressions tough when we get into this uncharted territory because you're not bumping up against resistance. Yes, there's some support down there, but I mean, when we're up and to the right, you look at the charts and it's kind of tough to pick out some levels. So I just had to kind of go in with what I thought was a fair pricing. I have a call spread today, Jim, as an example. Buying an end of month 3,300, 33.25 ES call spread for 9 ticks. This trade expires on Friday, January 31st, so we get through your beloved bank week as well as some other earnings. It risks 450 to make potential 800. The underlying, as you mentioned, 32.77. Just with a little bit of oomph maybe that we get out of those financials, some other earnings that come out by the end of the month, and you take advantage of that via a pretty close call spread.
So are you saying that it's becoming less and less attractive at these nosebleed levels, but to represent yourself long, an inexpensive way to do it is a call spread?
I think so,
That's
and
a fair
I think
phrase.
those were levels that
like
were, at least I believe those levels were attainable as well as fairly priced for what you're getting out of it.
Agreed. Okay, I'm looking at it from a long spot too, and I have for a long time, and I'm still bullish. But last week's trade didn't work because sometimes we have these big plunge down days in the middle of the week, and you get knocked out. So I'm widening out a little bit more this time.
There you go.
I'm buying the March Micro for 32.80 with a target of 33.50 and a stop place below 32.30. It risks 250 to make a potential 350. Like I said, widening it a little more so noise doesn't stop you out. Do you dig it?
Yeah, I dig a lot. 32.30, very good level, by the way. There's some good support down there, some inflection points, I think, to watch. I think widening out your areas at least, or even changing them. You know, that's the great thing about the micros is it doesn't take a lot of cost of capital, so you can obviously change those as the markets change. But I think that's a good level.
I always ask you about the Fed at the end of shows. I don't know why that's the habit, but it is. Does the Fed care that much about earnings season? Or are they worried about China? Or are they worried about Iran?
I think they care about everything. I think earnings season, though, Jim, if this one isn't so good, given that we've had pretty good reactions to so-so earnings so far, shouldn't worry the Fed if we get a stinker.
Thank you for joining us on Market Movers. I'm Jim Urio, where we are helping to make you a better trader.